Alright, welcome back everyone to another video, and as you can see today's title we're going to go over Autodesk. But please, before I begin, please consider subscribing. I really do appreciate it. I see all the subscriptions lately. You're awesome. I'm loving it. I've gotten more than I've gotten in the last month than I've ever gotten, ever. And I can't ask you enough to, subscribe, and then I can't thank you enough after you do subscribe. I greatly do appreciate it, and I'll make more videos as I see those subscribers rolling in. So let's keep this train a-rolling. Let's go into Autodesk. No, it's not an automatic desk. It's actually, IPO'd in 1985, and it is basically, like it says here, controls 60% of the market for CAD. So it's like, architects and engineers might use it, and, it's a really great software for that purpose, and it's been out for quite a while. It's up there with the Apples and the Microsofts as far as IPOing back in the mid to early 1980s. So let's get right into it. The stock forecast for Autodesk is actually really good compared to where it is today. There's about 30% upside, and it's a strong buy rating based on 11 analysts. 10 say buy, and 1 says sell. So someone's clearly a contrarian. Don't listen to them because 10 say buy out of 11. And it's got a $338 price target. And the stock analysis on this stock is actually not that bad. It's climbing up there. It's not, in the 5 or 6, which would really be neutral. I think 7 is a pretty good number. But, it's not that bad, and it's got some room to grow. So let's get right into the income statement. So their fiscal year ended at the end of January 2021, and as we can see, they've had top line revenue grow pretty well. In a pandemic year, that's pretty good. We're excited to see that, and I can't wait to see what it has in the future when they report on January 31st, 2022. Let's get right into it. So let's see what their net income was too. Net income soared to about 1.2 billion. That is unreal, obviously, compared to a huge loss. So they made a pivot to needing to making software that people needed throughout the pandemic because of the whole work from home thing. Autodesk was a huge play, and clearly people got rewarded for that huge play, and they did too. 1.2 billion compared to, their prior years. Let's get right into the balance sheet too. So again, same time horizon, same period. They've got about the same amount of cash, so that's okay. That's pretty good. That's pretty good to sit on about $1.7 billion, and they did the same in 2020. So they really didn't have to burn their cash pile, which is what we want to see. We want to see a strong cash position, sometimes even growing if we don't know of a huge acquisition that they made that was in the news where they did use most cash and not a lot of equity. So total current assets is about let's just call it 2.7 billion. So total current assets is about 2.7 billion, and total current liabilities is about 3.2 billion. That is not what we want to see. We do not like that. If it came up tomorrow that Autodesk was in trouble and they needed to liquidate everything, they actually would be insolvent. So they do not really have that great of working capital. That's going to kind of hinder them, and it looks like it's been hindered for quite a while. They have not had nearly as much current assets as they have current liabilities. And let's look at some long-term liabilities too. It's pretty consistent. It's actually about 1.6 this year, and it was about 1.6 last year as well. So they've got about 1.6 billion in long-term debt, and they could obviously wipe that out with their cash pile. Don't really get why they don't, but at the same time, whatever. I don't really understand it, but it is what it is, and they've accrued a ton of other liabilities on their current liabilities. So their total assets is about 7.2 billion, and their total liabilities is about 6.3 billion. We still don't like it because of the working capital. We want to see strong working capital, but we want to see this debt pile lower to around the $1 billion mark. That's what I would shoot for if I were them. Let's get into the cash flow statement. So obviously they had a strong net income to start the top of the cash flow statement. And we can actually see that they have made a few acquisitions. They spent about 246 million. They spent about $1 billion 2 years ago in 2019, and they, have been issuing some debt, around 500 million a year, it looks like, but they've also been repaying about 400 to 500 million a year. They should be consistently paying more than they're actually issuing. That would make more sense. It's a low debt rate environment, low debt interest rate environment, and they should be paying down more. It's okay to issue as long as you actually pay down more, though, at the same time. So I don't really understand this. I'm not really sure who the CFO is. I didn't take a look at that, but that's kind of questionable, and I don't really understand why they, why don't they repay more debt? And they do have, a negative. I mean, it's barely negative. It's a barely negative cash flow statement. So last year it was actually pretty strong, and before they were negative as well, pretty consistently negative. Last year was strong, and this year it's back to being negative. So I don't know. I don't know who the CFO is. Comment below if you know who the CFO is of Autodesk, but they need to do something. They need to do something different because this isn't really working. Let's look at a portfolio of Autodesk. So like I had said before, they had IPO'd in 1985, and if we look, $10,000 invested in the IPO would today be worth about $3 million, and that is a 17% compound annual growth rate. That's not bad. Best year was about 209%. Worst year was about down 60%. That's pretty bad. We actually don't like that. That's a down software year. Apple and Microsoft were never down, I don't think, that much. We can go back to one of my previous videos if we want to see that. But it's not that great. They actually have a lot of down years just to start, like in the 90s compared to their good years. So they definitely, went through some turbulence before they smoothed things out. They have not had a negative year. I mean, they're negative this year in 2021, but not counting this year, they were positive 1, 2, 3, 4, 5, 6, 7, 8, 9, 9 years in a row. Again, not including this year. So that's pretty good. In 2011, they were down about 20%. And they were pretty much, other than, in 2015, double-digit growth, which is pretty great to see, including a strong 2020 again, because of that pivot people needed to do to more online, buying more software, 66%. So that's pretty amazing, and we like to see that. So anyway, let me know what you guys think. I've never really looked at Autodesk before. I've never really considered it as an investment, and 17% doesn't really get me out of bed. I shoot for high alpha, especially beating the market wherever I can in the long term. The 30-year range, like that a lot. Just like a 20% alpha, or sorry, it's just a 20% return, not 20% alpha. That's some Jim Simons kind of stuff right there. Anyway, so give me a subscription, like this video if you do like it, and I'll try to make more content as I can, and as I see I'm getting more subscribers, that definitely gives me more of an incentive to make more videos. So again, comment down below if you like Autodesk, if you use it, have you ever heard of it, and let me know what you think. See ya.